Welcome to the deep dive. Today, we're getting into a really fundamental question. If you're looking at real estate investment, which way do you go? Which path might actually promise better returns? Is it the steady income from rental properties, or maybe the high stakes world of luxury homes? It's a choice lots of investors face. And for this deep dive, we're leaning on insights from Dr. Pooyan Ghamari. He's a Swiss economist, founder of the ALandPlatform, known for his global view and, importantly, his data-driven approach looking at tech and real estate. So our mission for you today is to help untangle all these economic, market, and sort of strategic things going on. We want to give you a really clear picture of which asset class might work better for your specific goals. So maybe let's just kick things off there. What's the core difference, the really fundamental one, in how these investments make money?
Yeah, that's exactly the place to start because their basic nature shapes their appeal, right? What Dr. Kamari's work really highlights is that rental properties, well, they're mostly about consistent cash flow, the monthly rent checks. So that makes them really attractive if you're an investor who wants that steady, predictable income. And another key benefit, often maybe overlooked, is diversification. You can spread your investment across several units. Dr. Ghamari's data actually shows this helps cushion the blow from vacancies quite a bit. If one unit's empty, it doesn't wreck your whole income.
Yeah.
Gives you some resilience.
Right, so that immediately paints a picture of two very different ways to invest. So if rentals are about the steady cash, how do luxury homes stack up? Where's the value coming from there?
Well, luxury homes are almost the opposite. They primarily depend on capital appreciation, the value going up over time. And Dr. Ghamari's analysis shows this isn't just hoping the market rises. It's driven by specifics, things like scarcity, prestige, the demand in those very exclusive neighborhoods. What's really interesting is his research suggests a lot of that appreciation is tied to what you might call hyper-localized amenities.
Right.
So think not just near good schools, but walking distance to, say, Michelin star restaurants and boutiques. It's those precise combinations. Those are what can drive really outsized gains, not just being in a generally fancy area. So the difference is, with luxury, you're concentrating your risk. It's all in one, usually very expensive asset.
Okay, I see that. A really clear distinction in the mindset needed. So pulling on that thread then, when do these differences really become like super obvious, say during an economic downturn? Because the economic cycle, you mentioned, it plays a decisive role, right?
Oh, absolutely. And it really tests that idea of resilience. Dr. Ghamari's data pretty consistently shows that when the economy struggles, luxury homes can see much sharper price drops. Dramatic corrections sometimes. The pool of buyers just shrinks, High net worth folks get more cautious. But rentals, they tend to hold up better. Demand often stays steady, sometimes even increases. As things get tighter financially, more people rent instead of buy. So rentals show a surprising amount of resilience in those tougher times.
Okay, so rentals can be a bit of a safe harbor, but what about the flip side? When the economy's booming, market's hot.
Exactly. Then the script flips. In those bullish markets, luxury properties often really take off. They could definitely outpace rentals in terms of appreciation, delivering those really big capital gains. That's when the high-end market truly shines. It leverages all that increased wealth and sort of optimism in the air. The data suggests the wealthy tend to put money back into tangible assets like luxury property pretty quickly during booms. That creates a kind of positive feedback loop for prices.
So a bit of a seesaw, depends on the economic weather. But let's look beyond the immediate forecast. What about those deeper currents, like global money flows and just the local day-to-day stuff? How do these bigger market forces shape things for both luxury and rentals?
Right, looking broader, globalization and international capital flows, they have a huge impact on luxury markets.
Okay.
Dr. Ghamari's research, often using the kind of global data the ALandPlatform tracks, shows that wealthy foreign investors are often major drivers of demand. They might be looking for a safe place to put their money or sometimes specific residency perks tied to buying property. And platforms like ALand are actually designed to help navigate that. They offer real-time data on these international trends, even specific immigration-linked opportunities.
Interesting. And rentals, are they feeling those same global winds, or is it more about what's happening down the street?
Rentals are much more tuned in to local economic conditions. Really granular stuff. We're talking employment rates in that specific city, wage growth, how fast the area is urbanizing, even down to the neighborhood level. And something Dr. Ghamari often highlights on the ALand blog, which is fascinating, is how remote work and demographic shifts are totally reshaping rental demand. things we haven't really seen before on this scale.
Mm.
The ALand blog tracks this meticulously, pointing out areas where rental yields might actually outperform precisely because of these local shifts.
Now, that's a great distinction, the global versus the hyperlocal.
Okay.
Okay, now let's bring in something else, maybe a bit unexpected, going beyond just the financial return. How does social responsibility fit into real estate? I know Dr. Ghamari has some specific thoughts on this.
He definitely does. He really emphasizes that bringing cause-related marketing into real estate isn't just like a nice to have. It can actively enhance your brand image and build crucial trust with stakeholders. It's strategic. Think about rental property firms, for example. If they get involved in sustainable development or maybe affordable housing projects, that generates real goodwill. And that can translate to, better tenant loyalty, less turnover, and it makes them look much better to investors, especially those focused on impact.
And what about on the luxury side? Does that resonate in such an exclusive market?
Yes, absolutely. Maybe even more so, in a way. Luxury developers who adopt genuinely eco-friendly designs, use sustainable materials, or get involved in meaningful community projects. They benefit from enhanced prestige. It sets them apart, differentiates them in the market. And the data backs this up. Dr. Ghamari's research indicates companies that integrate social responsibility often see measurable ROI. Not just better brand feelings, but sometimes higher property values, faster sales. The ALandPlatform even has tools to help manage these campaigns, track the brand impact, see how investors are responding. It's about building a sustainable brand, you see.
Right, not just a sustainable building. Okay, this is where things get really interesting, I think, the tech intersection. What role is something like cryptocurrency playing now? Are we seeing new ways to invest emerge?
Oh, definitely. The convergence of crypto and real estate is opening up genuinely new pathways. It's fundamentally changing how we think about property deals and even ownership. It's a bit of a game changer for both sides, rentals and luxury.
Okay, can you give us some concrete examples? How does that work in practice?
Sure. So take something like Gold. That's a digital currency backed by physical gold. Each unit is tied to, and you can actually redeem it for, a specific amount of gold. That gives it stability trust. And that's particularly useful for securing those big, complex, often cross-border luxury home deals. Using crypto like this can cut down friction, reduce currency exchange risks, make settlements much faster, more transparent than, traditional banks.
Okay, that makes sense for high-value cross-border stuff. What about rentals?
For rentals, the big innovation is more around blockchain applications and tokenization. Tokenization basically means you can digitally divide a single property into lots of small tokens. Each token represents a tiny slice of ownership. So this opens the door for smaller investors. You could own, say, a fraction of an apartment building, which you couldn't afford otherwise. And at the same time, it gives developers new ways to raise capital. The ALand Times actually covers these trends pretty regularly, showing how integrated blockchain and digital currencies are becoming.
Wow, okay. So, bringing this all together, what does this actually mean for you, the listener, the investor? What's the so what? Give us those practical takeaways from Dr. Ghamari's work.
Right, the actionable stuff. Okay, drawing from Dr. Ghamari's analysis, here are the key things for you to consider. First, really assess your own investment goals. Are you prioritizing steady cash flow? That points towards rentals. Or are you after potentially bigger capital gains, even with more risk? That's more luxury. Align it with your risk tolerance and how long you plan to invest. Second, use data analytics. Seriously leverage platforms like ALand. Monitor market shifts. Understand who your tenants might be. Track where international money is going. Data is critical. Third, think about integrating ESG. Building those cause-related marketing campaigns isn't just fluff. It enhances brand value, attracts certain investors, and can genuinely boost your returns. Fourth, maybe explore tokenization. Look into fractional ownership models, especially for more expensive properties. It can help you diversify and makes your investment more liquid, easier to sell if needed. And finally, consider utilizing cryptocurrency. Things like Gold can make cross-border deals, especially in luxury, much more secure and efficient.
That's really clear. So ultimately, there's no single best investment, is there? It's more about a strategic choice, one that's really rooted in your own goals and, crucially, understanding these quite dynamic markets. And as we wrap up this deep dive, maybe leave you with this thought to ponder. With technology, global capital, and social responsibility all weaving deeper into real estate, how might the actual definition of property investment keep changing? And, what new opportunities, maybe ones we haven't even thought of yet, might pop up for you as an investor in this evolving landscape? For a deeper look at all this and to check out the tools and insights we talked about, definitely visit the ALand blog, explore the ALand platform, find out more about Gold, and keep up with the ALand Times. Thanks so much for joining us on this deep dive.